Okay, we're going to do a quick session on inside candles. Um, and we're going over uh, what's called the Strat by Rob Smith. You can Google the Strat by Rob Smith and you can look at all the information that he has put out there. He created this strategy, but I don't use it. He wasn't a trader because, in my opinion, it doesn't work. But there's a lot of good golden nuggets within his ideas. And so what I do is I use my own strategy within his ideas. And his idea is this: you have only three candles, okay? You have an inside candle. So let's pretend this is a candle. So you can have an inside candle that does this, right? Wicks included. It's within this previous candle, right? So does everybody understand that an inside candle is a number one? That means it is inside the previous candle. That's it. Is there any questions on that? Okay. So if I ever say inside candle, it's a one automatically. Okay. I'm going to move this over here just so I can stay with chat. Okay. Got it. Okay. Now, the other candles that you can have are a two and a three. Okay. So let's pretend you get a one, right? So this would be a one candle. A two is it breaking up or down. So if the next candle is this would be a two down. And then if we had another candle that did this one would be a two up. Okay? So you've got the inside candle, you've got a breakdown and a break up candle. The only other candle that you can have is an engulfing candle. So if you have a candle that does this, it broke up and down. Well, that's a three. That's it. That's literally all your candles. Can you guys think of any other candle that can happen? The answer is no. You're either going to engulf, you're going to break up, you're going to break down, or you're going to go inside dead. That's it, right? And so this is how he broke apart his trading. And so you can see on a lot of charts, you could actually have a chart. Let me see if I can pull it up. That will tell you what each candle is. Like it'll actually put the number above it. Like you don't need it. It doesn't matter. But let's see. Like I know what that. See, let's see if I think this is it. So yeah. So like down here, this is telling me what all these candles are. So you can program this in, to have ones and twos above them. So you can look or whatever. But to me, I don't care. It doesn't matter. What I care about and what is so important to me is I want to be able to see. Let me see if I can. I'm going to zoom back into. I want to be able to see these right here. Okay. So what I've got here is these are all inside candles that I've shared. I've shared this with you guys, but if anyone else didn't get it, all of this area right here is inside candles. So you got a 15-minute inside candle, a 30, a 60, a 78, a 130, 195, and a daily, right? It's the same thing that I have for the TTM squeeze. I want to know when we're consolidating within a period of time. Okay, and so like today, we had inside candles on certain stocks like Google, right? And so that let me know, hey, Google consolidated yesterday, and we're probably going to get a two candle today. I want to be able to play this in that direction. So you can see this is an inside candle on Google, right? So what number candle is this? This is a number one, right? Now, I'm planning on a number 2 candle to come in today. I just don't know if it's going to be up or down. It looked like maybe we're going to push this morning, but then we broke down and it's a 2 down. Okay? And the way I use these things is they all lead into each other. So for today, the goal on Google would have been to come in here, figure out where the over under line is for the candle, the inside candle. So what I would have done personally, and what I did today, was I came in and I said, all right, on Google, just this candle from yesterday, right? Where is that over under level that will trigger us most likely coming down and breaking? Okay. So if you look at it, you can see pretty clearly where the VP is, right? If we start breaking down underneath this level, most likely you're going to come to this level and you're going to test the double bottom, right? And you can see that's exactly what happened. So for me, I don't have to wait. And per Rob's rules, he would wait for the candle break and then get in. So he would have been able to capture, 55 cents on this. Great. To me, I don't care about his rules. For me, it's the same ideas. We're getting us to trend in a certain direction. I would short on the breakdown of this level and then look for the extension down, right? So for me, I would be able to get $1.50 while he's only getting 50. Okay. And same to the top side, right? If we're able to push up and over, then there's room, right? You can see there's room for this to rip. Above these levels here, we couldn't push through them. It's like, let's go, right? Does that make sense? So I don't use necessarily, sometimes I will use the exact level of the breakdown, but it's more about finding the levels within the candle. Good. No, I'm using TC2000, Grant, but I'm sure TradingView here. Like, let me Google something just real quick. See if they have anything. Yeah, so I just Googled it and it looks like somebody had something on it. Usually people have already created this stuff for you. You just have to find it. So this guy has all of it. So you can find it. You can find it on the Strat. Just Google it and just Google TradingView and and the Strat and it'll pull it up. Um, I lost my here it is. There it is. Okay, put it back where it was. um, so what you want to do, or what I do, can't tell you what you want to do, but what I do is I come in here and I start to apply these ideas to my edges. And my edge is buying support and resistance, VP, and looking for trap traders, right? And so let's pretend we're looking at a daily candle. Well, on Google, right? We're short Google, we're making money, we're happy. Well, what happens if it doesn't reach our profit targets and it reverses? Well, it's a failed candle. You're going to lose money on that inside candle breakdown, right? Does that make sense? So while this one's working perfectly, we're making lots of money. There are times, and I'm going to show you an example of it because I played this, where you have an inside candle that rejects the breakdown. So can you guys tell me the candle that I'm pointing at right here? What number candle is that right there? Can anybody tell me? What would that be called? This one right here. What number is that? That's a 1, right? That's a 1 candle. So that means what? That means it's inside. That's it. It's just an inside. So can you guys tell me what candle this is? The one after it? What candle is that? Can you guys tell me? Yeah, it's a 2 down. It's a 2 down. It's not a 2 up, right? It broke the downside, right? So do you see how it broke the low here? And so this candle's a 2 down. Okay? And so what I do every day when I'm trading, at the end of the day, I'll go through and I'll look for candles that have gone inside day down and inside day up, and inside week down and inside week up. And I look for these that could be failed breakdowns. On Google, I promise you, I don't think it's going to happen, or it could, shoot, with the FOMC. I promise you, if this candle pushes back up and finishes up here, you're gonna have a 2 down that could possibly reverse it, go 2 up tomorrow. However, if we finish down here in this range, I'm not going to be looking at this for a reversal. I'm going to be like, yeah, it's probably going to be a continuation and or inside day tomorrow. However, on CPS, do you see how the bulls fought back and we had a breakdown of lows and it was immediately bought up? This is where you should be getting washes, right? But man, it was bought up and we fought all the way back and we're finishing up here. Hey, we've got a shot of having a 2 up the next day. And what that's called, they call it a rev strat, a reverse strat. That's their terminology. I call it a breakdown and reclaim. That's all it is. It's the same thing as a breakdown and reclaim. And what has to happen is you have to break the lows, which they did, and then you have to reclaim the main VP levels within the previous couple days candles. Does that make sense? And so for me, the way that I play these is off of VP, but the way that the strat says to play these is you would buy on a rev strat on the break of the high of the 2 down candle, right? And so it's an applicable rev strat if you break this high. And so your entry on this should have been right here, and your goal would have been to take it back to here and then hold a piece if it runs, right? So the goal for the rev strats is to always take it back to the previous candle's high. That's how they do it. I don't care about any of that. The only thing I care about is finding the ranges with VPs. Okay? And so what I'll do is I'll zoom in here again. I'll say, hey, where are the VP levels? And so we're looking at the 13th and the 12th and the 11th. Let me maximize the give me one sec. I gotta move OBS. I need more screens. Ah, I think I did it. OBS. Yeah, okay. Perfect. Okay, I'll catch up on chat here in just a sec, guys. Just give me a minute to get through the explanation, and I'll answer all your questions. I promise you. So we're looking at the 13th and the 14th. I mean, I'm sorry, the 13th and the 12th, right? This is what everything was looking like when we had the failed breakdown. You can see the failed breakdown down here. You can see the push back up, right? And so you guys tell me, it's pretty obvious. Where's the over-under levels on CPS? I mean, it's not hard to see. You've got these two humongous bars that are sticking out like a sore thumb, right? And so for me, above this level, it's a go. 14, 16, let's go, right? So now let's bring it back to the chart. And on this particular one, we line up pretty close to that inside candle. I mean, I'm sorry, to that 2 down break of the high side, right? That makes sense. So the buy on their ticker was the break of that candle. Mine's just below it. So in this case, in this example, I wouldn't mind playing the break. Great. If it breaks, I'm in. So on this candle, literally what I do is I come in here and I say, okay, I'm putting in a buy stop order, which means if CPS prints a 1421 or higher, I automatically buy. Okay. But again, their stop, the way that they do their stops is very, what Rob would always say is just give it a nickel, give it a dime. But a lot of times on bigger stocks too that have more volume, you just get stopped out all the time. It just doesn't work. But he's not a trader. He doesn't deal with the minutia of actually putting it to work. It's all theoretical. And so for me, what I would have done there, again, it's not hard to see the two levels down here. For me, I would have said, you know, my stop's going to be the low side of this VP, right? I wouldn't have had the stop be up here near 1416. I would have brought it down here, and I would have said my stop's going to be around, you know, 1405 to 14, right? And so I'm just using VP in all of these. And so when you guys ask, hey, where's your entries? Where's your exit? When do you get in? When do you get out? It always depends. Always. There's never an answer to say buy at this level. Otherwise, I would just have a computer do it. And I promise you, if Rob's programming worked, he would have had a computer do it and never traded, just had the computer do it and sitting on the Bahamas somewhere, just sipping Mai Tais. It just doesn't work that way. And so what I do is I look for these inside days to play them in a direction. Once they choose a direction, if it's going to reverse, then great. I'm going to be willing to play that as well. So that means if I play an inside candle down and I stop out, well, shoot, that means it's going to be, it has the possibility of being a reverse strat, right? Either way. So it's like if Google today did not give up the ghost and just go straight down, and I would have shorted, you know, let's say I would have shorted here, and then Google just comes to right here, right? And then reverses and closes up here. Well, your candle would have looked like this, right? It would be a kind of like a butterfly doji or a long-legged doji, whatever you want to call it. But the bulls got beat back, but then they fought back against the bears, and it looks like it might come back up. And that's exactly what the SPY did yesterday. You guys remember? And this is when I said yesterday, guys, if you want to take a trade, if it looks like we're going to close in this box up here, I think it's safe to take a long play. I think if we close in this circle down here, it's probably going to be a short play, right? And so depending upon where charts are and where they are is where you get in, where I get in, and where I get out. I find support and resistance. I buy it, support. I sell at resistance. Okay, now let me catch up on chat. Okay. Are you using the volume profile point of control for the one candle for the 2 up, 2 down play? So Jack, that's a great question, and I'll give you an example on Google. So Jack's question is, if I'm understanding it correctly, Jack, are you using just the volume profile in the point of control area for this particular one candle? So on Google. And the answer to that is, unfortunately, yes and no. You know, within trading, it's never easy, right? The answer to that is yes. This is going to have the highest effect. So for me, again, I'm going to maximize here. When I come in here and I look at Google's previous day, so what I did for this inside candle, I'm immediately looking at today's. I'm sorry, the previous days, the ones, right? The one candle. And it's pretty clear and obvious. Okay. I'm just going to change this color so we know that this is the one. Make it a little bit thicker. We'll make it yellow. There you go. Okay, so now we know that this is the previous day. But if I see a big candle come in from the day before that, right? Like let's pretend I look back at the day before it and there's another candle that is sticking out here, then yeah, it's in play as well. And what I would tell you, this is what I call range 2 or the current VPVR. Stay within that, and as long as you're staying within that section, you're good. But the previous day's volume is going to have the most impact. Does that make sense? So yeah, you take them into consideration, but they're not going to impact it as much. So for example, if on Google, let's pretend there was something right here and it looked like I could short this down. All I would do is short it and cover a piece here, because what could happen and what would most likely happen is you'll get a little support off that level and then it would roll. And if I wanted to re-add, I could. If I just wanted to take some profits, that's fine. Same idea here as a double bottom, right? Same idea here as your profit target level. It's the same thing. So no matter what happens, that's just how I trade, always. Does that make sense, Jack Straw? I hope so. Mark D, so here we can do another one live with you guys. Where's your entries and exit? It all depends upon where the VP levels are. According to the Strat, Mark, I'll show you what the Strat's game plan is. So according to the Strat, I'm going to take these lines off. Can anybody tell me what candle this is right here? What candle is this? The candle previous to the inside. Does anybody know what that is? There's no such thing as a 1-up, Paula, right? A 1 is just an inside day. So Mark D is correct. It's a 2-up, right? And so you can see we didn't engulf, right? We stayed, the low was above the low of the previous day, but we went higher, right? And so this is called the 2-up candle. So the goal of the 1 candle right here is if we break highs, according to the Strat, their target is the high of the previous candle, which would have been the high of the 2-up candle. And if it breaks lows, then the goal is the low of the 2-up. Yeah, the 2-up candle here. So literally your goal on this Google would have been like a few cents. And they say, well, if it's super close, you could take it to the next candle. But again, it's like 50 cents now, right? So this is why I don't use their strategy. What I use is for scanning, and their ideas are correct on consolidation. And in auction theory, it's called finding a value zone and then moving to the next value zone. That's what you're doing. That's what happens throughout the market every single day. And so that's how I use it. And so for me, it's all about taking support to resistance, right? Taking it long if it gets over support, taking it short if it gets under, right? That's it. Okay. And where do you play? Do you only play inside candles, or are those most successful? No, Mark. I play rev strats. I play. Honestly, my favorite is they call it the rev strat. I've told you guys it's the break and the reclaim. That's my favorite to play. I don't think I have a YouTube video on it. I can make one, and I can put together something for you guys for sure. D-Man, are you still in Google? John, the answer to that question is yes, but I'm not sure what you're asking me because I am in this long term. So I'm in Google in multiple ways. Okay, so yes, I'm in Google from the lows. I started buying back in October, um, and was scalping this into a position. So I'm still holding this. I'm still holding a swing that I started from this earnings play gap up here. Um, and I'm still in a short position from today. So I'm in Google, but I don't know which one you're referring to. So, you know, for me, because I've earned the right to do this, I can play multiple buckets on a particular stock. A lot of newer traders have a hard time doing that. Okay, so you were just looking for the VP for the single day before. Yeah, that's the main VP, but always take into account the previous, especially if there's a lot there. Um, okay. Could I max the screen? I apologize. Did I not max it? Okay, so Daryl, so AMD had, so yeah, let's do some live examples. Yeah, so yeah, this was an inside day, right? Perfect. So according to the Strat, right, you would buy on a break of 102.88, and your profit target would be all the way up here at 107. Do you think you're going to get that today? Probably not, right? So what I would have done is I would have gone in, and if I was going to play AMD today, sorry, I had an alert go off. Okay, so if I was going to play AMD today on an inside day, what I would have done is you can see the inside day, right? So from here to here is a day. So this is your one, right? This is your other candle. And so the low here, that's short the low, or you buy the breakout, right? Okay, well, on this particular one, if I'm looking at it and I'm breaking down the VP, I probably would have waited for a break on this one. You can see if we start getting above this VP level, you could have bought it a little earlier. Honestly, if I was watching this today, I probably would have bought it earlier because you do have open print price, right? You got your gap close. You got, yeah. If I was playing this, I probably would have bought this level, because it matches up. If open print price was down here, I probably wouldn't have bought it. So when is your entry, when's your exit? It depends. There's so many factors. You just have to place. You have to trade so often that you learn all these factors. And so the goal would have been way up high, but for me, right, I would be like, well, shoot, let me figure out where the VP levels are from the previous day, and you can see you've got some really here. So this is going to be your first range of resistance, and within here, and then here's your next range. So if you wanted to say, you know what, let's see if we can take it to these levels, right? Yeah, that'd be great. So you can see, for me, what would have happened is I would have taken at least one profit off at this point, right? So we pushed up, we got to that resistance. I would have said buckets, throw the money in the bucket, and then I would have put my my stop on either break even overall. So what that means is this is $1 gain that I made on this piece. So I would have said, all right, now I can lower my stop to $1 lower, and it's a free trade. I get out and it's break even if it reverses. Or I would have done it at break even and said, at least I made this dollar. That's how I would have set that up. Okay. Now, the one thing to understand about candles like this one on AMD, if you have a failed breakout and you start pulling back, they have a rule where if you, I'm gonna try to find one, where if you let me shrink this back down, where if you go, let's say it's a 1. So like on Google today, Uh, no, it started higher. I'm trying to find an example of what creates the three candle, what creates the engulf, and what creates the engulf is, um, let's see if I can find one on these charts here. Let me look on Tesla. So I can show you just this one as an example. So this candle right here, you see we opened up here. We tried going up, right? And it failed. They also have a ruling where if you go below the 50% mark of this candle, you're probably going to engulf. So they have it something where if you go below 50% right here, you short it and take it down to the low of the candle. So for me, I don't agree with the 50%. I agree with the break of the VP. So you had a failed breakout. You guys know I love the failed breakouts and the failed breakdowns. But once you break out and trap everybody and then come underneath wherever the main VP is for this candle, yeah, you're going down to that lower bottom. That's what I agree with. Wherever that is, it's not always going to be 50%. It may be 30, it may be 70. But again, this is me taking their ideas, applying it to my own, the way that I trade, right? Okay. Um, yeah, Russ, exactly. So no. So for in this particular example, yeah, I am worried about the VPs of this level as well. That's being formed for the day, but the main concern is the previous day. So this would be a two up. So this candle, once we break up, and what happens when you break up, just think about it from a psychological perspective. Are people buy breakouts, right? So you've got all these people that bought in here, right? And you've got all these people that are long in here. I mean, this is a bullish candle. Look at this thing. I mean, it's a, I forgot what Harishimu or something like that is what it's called. Like there's no wicks. It's just a straight up. You opened and you went straight up and you closed and you never went down, right? It's just like, I mean, this is as bullish as you get. There's like barely any wicks. And so everybody's like, whoa, we're going to the moon. We're going to 300. Woo! You know, people add right here, and then all of a sudden you break down and everyone's trapped. And if they're the bulk of people of the volume were traded right here, well then everyone's not trapped. You got to get below these people. But if the bulk of the volume was up here and you get below them, yeah, they're all trapped. So I may not even have to wait to the 50% range. I can short higher because this is the main VP level. And so if I were to zoom in here, let me see if I can actually do it. I don't know if I'll be able to get the best detail, but this is the date, which is the 20th. So here I'm going to, on this particular instance, what I would look at here is, I'm going to go 5 minutes and see if we can actually see the VP from that day. 10-minute, 15-minute. So I'm not going to be able to see it real detailed. I got to go to 30 minutes. You guys will probably be able to see it better in TradingView. But we'll try it. We'll check it out and see. So it's just not. I don't get a lot of clean candles, but it looks like this section here is the bulk. And so what I look for on these is what I call this slant. So you see how this is slanted? What that means is if you break below these people, you've got a waterfall coming. It's going to be going down. Now, if the VP looked like the opposite way, if the VP was going this way. So for example, if this VP was out to here, and then this VP was out to here, and then this VP was out to here, well, now you've got the slant going this way, right? And you would have to break below these people to really trap everybody. So the short would have been breaking down from here instead of here. Does that make sense? So that's what I look for. I don't care about anything besides the VP and people. My strategy is playing other people. I know other people can't control their emotions. I know other people are going to act the same way that humans have acted since the beginning, and that's all I care about. Does that make sense, Russ? Hope that makes sense. Okay. To be more specific, yeah, Mark, I'm recording this. Does anybody else have any questions? So you're the one that takes all my money. Todd, I gotta admit it, I am. And what I'll tell every single person out there, I'm not even the best. Think of me as like if we were the Chicago Bulls team, the '97 Chicago Bulls, the greatest team to ever be assembled, besides the Dream Team in '92. Um, I would be the guy sitting on the bench that would be the 12th man, bringing all the stars to water. I'm in the game. I make good money. I'm doing great, but I'm a small fish in a big pond, right? And you've got people 100 times better than me that are trying to take your money. So make sure you know what you're doing before you start sizing in. Don't blow up your account, right? Okay. Yeah, so the zoom selected area that would work, Tommy. It's just it because I have to use a 30-minute chart. I can't get any more detail. That's the limitation of TC 2000. So what you can do, Tommy, on TradingView, for example, is you could come in here and you can tell TradingView, you can say I want from um, June 20th to June 21st, and you could look at it on a 1 minute chart and you could see the VP. But for me, the earliest that I can, or the I have to use a 30-minute chart to go back there. And if I do the zoom too, I'm still going to be on a 30-minute chart. Does that make sense? It doesn't matter. And a 30-minute chart gives me 50 cent spreads or 25-cent spreads. But if I looked at a 1 minute, I could literally get nickel spreads, right? And so like if I were to look at a 1 minute on Tesla today, I got nickel spreads, right? Now I can see a much more detailed VP. So that's just a limitation of TC 2000 versus TradingView. Okay. Would anchored VWAP work? Chris, yeah, it's very similar. So here, look, it's the same idea. Um, so if you wanted to come in here and put in an anchored VWAP, right? You're gonna be about that area most of the time. So if you would have done that today, Chris, check out, you would have nailed it. You're right on it, right? So the rule on these plays also is if you gap below, you have to wait for a retest, and you got it, and then boom, it breaks down, and as soon as it breaks that VWAP, it's gone. So it breaks that VWAP, breaks that low, breaks this low, waterfall, machine gun, boom, there it goes. So yeah, it's the same idea. What I would caution you of, very rarely, but it does happen, when you use an anchored VWAP, sometimes it can skew it if there's a lot of volume traded at the lower range and the higher range. Because what'll happen is you'll have VP that looks like this, right? You'll have small VPs and then you'll have high ones at the top and the bottom, but your anchored VWAP is going to be here. And that's useless at that point. It doesn't happen, like, it's really, really rare, but it does happen. Okay, do we watch today's recordings on your YouTube channel? Yeah, Mark, I'll put them up there. I'll put it on the YouTube channel. Sometimes I forget. Sometimes I can't get it to upload. I'm not the best tech guy. Hopefully one day soon we can get all this in-house and you guys can just use it in-house. Um, can you quickly explain your candle color scheme again? Yeah, would anchored VWAP be best used on open? Yeah, I mean, absolutely. Yeah, you'd want it on there from the open, 100%. Um, so the candle color here, I use this particular candle color setup because it gives me more detail. Um, if if it's filled, if you have a candle that is filled, then we closed lower than we opened. We opened up here and we closed down here. If we have a candle that is empty, we finished higher. So we opened here and we closed here. Does that make sense? Any questions on that? Does that make sense, Todd? Okay. So it is green, right? So, well, here, let me actually show you this one. This is a good example. So you'll notice most of the red candles are solid, right? Most of the red candles are filled in. Well, that's because literally you're filled in if you close below your open, which is most red days. So they're full. But occasionally you'll get a red candle that is hollow, and all that it's telling you is that we opened low, like right here on this hollow red candle, and we closed high. So why is it red? Well, it's red because we finished below the previous day. So that's a red candle. Does that make sense? And so on this one over here, right, we opened here and we closed here. But we're still below the close of the previous day. So it's red. Does that make sense? Oops. So this, to me, this is just what I feel and I'm comfortable with. This tells me more information. This tells me as much as I can on the charts. And I mean, you can use it any kind of chart, whatever kind of chart that makes you happy, you know. I mean, have you ever seen these candles? I don't know if you've ever seen these candles. Some people use these candles, right? But after you get used to seeing things, you get it. Would anchored be web best used on? Yes. Okay. Okay. I'm subscribed. I was just making sure. Someday, do you mean? Yeah. Yeah. Someday, hopefully. Is anchored VWAP same as VWAP? No. No, it's not. Um, anchored VWAP does the same formulation as VWAP, but over a period of time. So VWAP is used for intraday. So somebody give me a ticker, any ticker. I don't care. Somebody just type in a ticker. What ticker? First ticker wins. CVNA. Let's do it. So if I look at CVNA today, let me take out everything but VWAP. So you can see the volume weighted average price for today, right? It's up here. So we're under that, right? But if I wanted to see, well, what about the average price from the lows here? What about all these people that were dip buying? Well, we're sitting right on them, right? So we're sitting right. You see where the anchored VWAP is here? You see how it's all these lows? We're literally running into that area, right? And if I want to say, hey, what about from the gap up? Well, there's your anchored VWAP. And what that means is now, if I come in and put a look for volume profile based on the gap up from this level on CVNA, watch if I can show it. Get it back there. There we go. So that's the level. Actually, I'm gonna get rid of these to make it a little bit bigger. So what this is saying is from this, I'm going to use your zoom to button here. Oh, whoops, wrong button. Todd taught me the other day about this zoom to button, and I love it. Spacebar, zoom to, select region. So you can see the main VPs are here and here, right? Those are your levels. Now, if we go back and we look at the candle, where's anchored VWAP? Well, it's right on it, right? The majority of the VP usually lines up with anchored VWAP. It will not line up with anchored VWAP if there's longer VP here and longer VP here, because it skews it. And again, this is taking the average. And so then your anchored VP would be, your anchored VWAP would be here, but the volume profile would look like this, right? And so that's the only time anchored VWAP is going to skew. Oh, that makes sense. What the difference is between anchored VWAP and VWAP. Okay, guys, the hour's about up. I got to jump off, take care of a few things. I'm going to be back though to trade. I think Nate and Nate G are going to be on mics together to trade the FOMC stuff. And hopefully that'll give us some direction. But before I jump off, does anybody have any questions? Or is there anything that we went over that you did not learn, understand?